Global stock markets are experiencing a significant downturn, causing widespread concern among investors and financial analysts alike. Investors are increasingly worried about the rising interest rates and the looming possibility of a global recession. The financial news is filled with headlines predicting economic slowdowns, and traders are reacting with heightened anxiety. Central banks around the world are taking aggressive measures to combat inflation by raising interest rates. These actions are intended to stabilize the economy, but they come with their own set of challenges. Higher interest rates make it more expensive for businesses to borrow money, which can lead to reduced investments and slower economic growth. Many companies are finding it difficult to manage their finances under these conditions, leading to potential cutbacks and closures. Adding to the global economic uncertainty is the ongoing war in Ukraine. The conflict has not only caused immense human suffering, but has also had far-reaching economic consequences. The war has severely disrupted supply chains, making it difficult for goods to move smoothly across borders. This disruption has led to shortages in various sectors, from consumer goods to industrial supplies. Additionally, the conflict has pushed energy prices to new highs, affecting everything from transportation costs to household energy bills. The combination of disrupted supply chains and soaring energy prices has fueled inflation, making it more challenging for businesses to operate efficiently. Many factories are slowing down production, and business owners are feeling the strain as they try to navigate these turbulent times. The rising inflation rate is a clear indicator of the economic stress that is being felt worldwide. Central banks play a crucial role in stabilizing economies. They are tasked with controlling inflation and ensuring stable prices for goods and services. To combat rising inflation, many central banks are raising interest rates. The U.S. Federal Reserve, for instance, has been aggressively raising interest rates. The goal is to cool down the economy by making it more expensive to borrow money. Higher interest rates encourage saving and discourage spending, which can help to bring inflation under control. When interest rates rise, borrowing money becomes more expensive. This affects businesses and consumers alike. Businesses may delay expansion plans, leading to slower economic growth. Consumers may cut back on spending as loans for cars and homes become pricier. This uncertainty around interest rates is making investors nervous. Higher rates can impact company profits and make stocks less appealing. As a result, stock markets have been declining.
The recent jobs report from the United States has added to the market uncertainty. While the U.S. economy added more jobs than expected, wage growth remained strong. This suggests that the labor market remains tight, which could contribute to further inflation. Investors are closely watching economic data for clues about the future direction of interest rates. Strong job growth could give the Federal Reserve more room to continue raising rates, which could further dampen stock market sentiment.
Section 5. Mixed reactions around the world. In this section, we will explore how different regions across the globe are responding to recent economic events. The reactions are varied and complex, reflecting the unique economic landscapes and challenges faced by each region. The impact of these economic events is being felt globally, but different regions are reacting in unique ways. While some markets are showing resilience, others are experiencing significant turmoil. This disparity highlights the interconnected yet diverse nature of the global economy.
The US stock market, for instance, has been particularly volatile. Investors are grappling with a mix of optimism and fear, driven by economic data, corporate earnings reports, and geopolitical tensions. The volatility is evident in the daily swings of major indices. The technology-heavy Nasdaq index has experienced significant declines as investors shy away from growth stocks. Concerns over rising interest rates and regulatory pressures are causing investors to reassess the valuations of tech giants. This has led to a notable shift in market sentiment.
Other regions, such as Japan, are facing their own set of challenges. The Japanese stock market has been under pressure due to a combination of domestic and international factors. Economic growth remains sluggish, and the country is grappling with demographic issues that impact long-term prospects. The Bank of Japan has maintained ultra-low interest rates for years to stimulate its economy. This policy aims to encourage borrowing and investment, but it also comes with risks, such as potential asset bubbles and financial instability. The central bank's actions are closely watched by global investors. This divergence in monetary policy between major economies can create volatility in currency markets. Exchange rates are influenced by interest rate differentials, economic data releases, and geopolitical events. Traders and investors must navigate these complexities to manage risks and seize opportunities in the forex market. In Europe, the situation is equally complex. The European Central Bank is balancing the need to support economic recovery with concerns about inflation. Different countries within the Eurozone are experiencing varied economic conditions, adding another layer of complexity to the region's financial landscape. Emerging markets are also feeling the impact of global economic events. These markets often face higher volatility due to their reliance on foreign investment and commodity prices. Political instability and economic policy changes can further exacerbate market fluctuations. Global trade is another area where mixed reactions are evident. Supply chain disruptions, trade tensions, and changing consumer demand are affecting international trade flows. Companies and governments are adapting to these challenges in various ways, from reshoring production to seeking new trade partnerships. Despite the challenges, there are also opportunities. Investments in renewable energy and green technology are gaining momentum as countries seek sustainable economic growth. These sectors are attracting significant capital driven by both environmental concerns and economic incentives. In conclusion, the mixed reactions around the world underscore the complexity of the global economy. While challenges abound, there are also opportunities for growth and collaboration. By understanding these diverse reactions, we can better navigate the uncertainties and seize the opportunities that lie ahead.
Section 6. U.S. markets feel the pressure. The U.S. stock market is facing pressure from several directions. Inflation remains stubbornly high, prompting the Federal Reserve to take aggressive action. Rising interest rates are making it more expensive for companies to borrow money, potentially impacting profits. The U.S. economy is also grappling with the ongoing effects of the war in Ukraine and supply chain disruptions. These factors are contributing to uncertainty and making it difficult for businesses to plan for the future.
Section 7. Japan's unique situation. Japan's economy is in a unique position. It stands out among the world's major economies due to its prolonged battle with deflation and its distinctive approach to monetary policy. The country has struggled with deflation for decades, and the Bank of Japan has kept interest rates extremely low to try to boost inflation. This strategy is aimed at encouraging spending and investment by making borrowing cheaper. This has created a divergence in monetary policy compared to other major economies, like the US. While the Federal Reserve and other central banks have been raising interest rates to combat inflation, Japan has maintained its ultra-low rates. While rising interest rates elsewhere are causing concern, Japan is hoping to finally see some sustained inflation. The Bank of Japan's goal is to achieve a stable 2% inflation rate, which has been elusive for many years. The country is also grappling with a shrinking and aging population, which presents long-term economic challenges. With fewer young people entering the workforce and a growing number of retirees, Japan faces a potential labor shortage and increased social security costs. To address these issues, Japan is investing in technology and automation, hoping to boost productivity and support its aging population. Innovations in robotics and AI are seen as potential solutions to mitigate the impact of demographic changes. Despite these challenges, Japan remains a vibrant and resilient nation. Its rich cultural heritage, technological advancements, and strong work ethic continue to drive its economy forward. The unique situation of Japan's economy is a testament to its ability to adapt and innovate in the face of adversity.
Section 8. Corporate earnings, a glimmer of hope. Amidst the market turmoil, corporate earnings offer a potential bright spot. Many companies are still reporting strong profits, despite the challenging economic environment. This suggests that businesses have been able to adapt to rising costs and supply chain disruptions. However, investors are closely watching for any signs of weakness in corporate earnings reports. If companies begin to report declining profits, it could further fuel market anxieties. Section 9. The inflation puzzle. Inflation remains a key concern for investors and policymakers alike. Central banks are walking a tightrope, trying to bring inflation under control without triggering a recession. The war in Ukraine and ongoing supply chain bottlenecks are making it difficult to predict when inflation might start to recede. If inflation remains high, central banks may be forced to continue raising interest rates, potentially slowing economic growth. This uncertainty is contributing to market volatility.
Section 10. What's next for investors? Navigating the current market environment is challenging for investors. Volatility is likely to persist as central banks continue to adjust monetary policy. It's essential for investors to focus on their long-term goals and avoid making rash decisions based on short-term market fluctuations. Diversification remains crucial, as does staying informed about economic developments and their potential impact on investments. Seeking advice from financial professionals can also be helpful during times of market uncertainty.
Section 11. Navigating uncertain waters. The global economy is facing a confluence of challenges, from rising interest rates to geopolitical uncertainty. These factors are contributing to stock market volatility and creating a sense of unease among investors. However, it's important to remember that markets are cyclical. Periods of decline are often followed by periods of growth. By staying informed, remaining patient, and focusing on long-term goals, investors can navigate these uncertain waters and position themselves for future success.